If you find yourself making money, having your strategy work until the market pulls back, then it feels like nothing's working. Well, I hate to tell you, but you do not have a strategy. And I spent years struggling until I learned this one thing. So today, I want to show you why having your account go like this doesn't mean you have a good strategy, doesn't mean you're making good decisions, and it certainly doesn't mean you're using the right stocks. Because let me show you what this actually looks like. So if I scroll out, this is what I'd be looking at is if your account is going up, it's more so a correlation of the market. And when things get hard, it's not because the strategy stopped working. It's because it's just tied to a bull market. And that's what most strategies are designed to do is make money when the markets go up. And I know plenty of people that can do that. And I know plenty of people that can take their accounts up substantially during these periods. But again, if the markets are going up 30%, you should be making way more than that, especially in the last 60 days of this stretch here. But here's the thing that breaks everybody. They think this strategy is a winning strategy. And then what they do next is continue to use it in the flat market, which is what we're seeing now, or in a correction, is what we saw in April. But that strategy used in this market or in April's market will completely tank your account. And the reason why I say the people that do see success, but when it breaks down in bear markets, corrections, it's not a system, is because they lose more. They lose way more than they gained because they can't manage their size, they can't cut their losers, and they can't certainly understand when to turn off the higher risk system. So, the more important thing to figure out is number one, why are we using the system, the stock, and those entries in the first place? Because that might be able to be replicated in the next one we use. Maybe it's V2, or maybe we realize we're just going in the hamster wheel cycle, making money, giving it back, making money, giving it back. Because that is the problem with most strategies out there. You just only make money in the good times and you give it back in way more in the bad times. Take, for example, people who do credit spreads. With a credit spread, you're making $30, right? So if you're making $30 on a credit spread, let's say every day, and you're in this market, let's say you're only doing bullish spreads, you're probably making money for 2 months and your account likely has tripled. But the spreads likely are going to have a 10 times downside. Let's call it a $300 loss. So the minute the markets pull back, flip, trade sideways, test those strike prices a credit spread would have, you give up 10 wins, 20 wins, 30 wins, back to back to back to back. And trust me, it's not fun when that happens. It gets emotional because I took my account up 1,000%, 500%, 300%, so many times. I can't even tell you. But the amount of times my account stayed there and didn't go backwards, there's not many at all. In fact, I can only name like a few where I've doubled, tripled my account and it didn't go back substantially. So here's the key lesson of today is scrap the strategy. Scrap everything you've been taught, everything you've learned, and understand one thing. The strategies that involve day trading and swing trading and option buying all have one thing in common. They have this time where you're timed out of the trade. A day trade, you're out in a day. A swing trade, you're out in 7 days, 30 days, 90 days, 6 months. And an option trade, you're timed out by the expiration date. So every one of those trades has to take a stop loss, right? So a stop loss just because of the time factor that you can't hold the trade. And the ugly thing about that is you can't control that. You can't control the fact that you need to take stop losses. And most people will not. They'll be very bad at it. They won't understand when. And they'll kind of average in, they'll double down, and they'll lose even more. So, this is why these strategies are broken because this market, You're taught to not take stop losses and get rewarded. You're taught to hold losers and get rewarded. So this reinforces that holding loser mindset. And then that's what kills you in the markets flip. And so you can do what most people do is next time I'll figure it out. Next time I'll be smarter with my risk management and I'll honor my losses. But most people don't do that. Most people do exactly what I said the next time. So they make money and give it back yet again. And I went through this cycle for 3 years. So the switch you guys all know, I'm going to tell you, is obviously selling put options. And I'm going to tell you why it's a win win win. Because this is the one strategy I've found I can teach a complete beginner and go to sleep happy, knowing that beginner is going to be okay. Whether they botch it, whether they get in early, whether they get in late, whether they double down, whether they have too much size. I love option selling because in 99% of the markets, you can always just keep holding. And what I mean by that is this market, you're holding your trade, it makes money. This market, you're holding your trade, it makes money. This market, this is the down market, you will hold your trade, it can make money because a down market just means assignment. An assignment is a delayed loss. You're basically passing over the loss to the stock. And the stock you own is your assigned stock that you can keep holding, which is actually wild because one, you're getting the stock at a discount, which really helps you mitigate the blow, but also helps you get in to a place where you can make money, which is very, very, very important. So for example, this market pullback in April, if you sold a put option, you might be in the middle of the pullback, maybe the bottom, who knows. Either way, if you get in here, you just have that much more upside when the market recovers. So you might not make the full 33% we saw, but you could make for the triple Qs 20%, 25%. The point is, you can always keep holding. And what I tell my students is this factor of how long would I make money, how long could I make money, or how long till I can make money is really based off of how low you can get in on the pullback and the corrections. Because there's only a couple times a year the corrections happen. And your goal is to get in as close as possible to the bottom because that helps you break even, make money in that cycle much sooner. What I mean by this is, for example, in the April crash, this April crash last year, the markets pulled back substantially, 30%. So if you took the nibble at this first pullback, let's say you're in over here, you would have to wait from here to here to break even 70 days. And it might seem like the end of the world because you have to wait to make money. But again, we are deciding to get away from day trading and swing trading because those people are blowing up their accounts in that same move. All I'm asking you guys to think about is it's okay to wait versus blowing up your account because the alternative to option selling is everything else crazy and risky and crappy out there. So the only trade off is waiting for a play to make money, which is not a bad trade off. But your way to maximize this and get better over time is not get in here and not get in here, but how do you get in there? Because the time to make money, if it can be one day, that's the difference maker because not only are you not sweating, but you're instantly green and you can be holding that winner for extended periods of time, having so much upside. So the beautiful thing of option selling again is you're not tapped out. You're not having these moments you restart your career, restart your account like every other strategy being taught online. Option selling allows you to wait through a loss and let it come back. And the only factor to focus on to be the best option seller and maximize yourself versus everybody else is getting in at the bottom of a correction. And it's tough. It's tough to figure out. It's not easy to say on this video and show you what that looks like. But everybody has to focus on that if they want to be the best option seller possible. So I teach a lot of this in the coaching program. I teach a lot of the ways to find an entry, find a bottom. You can see the arrows on my chart, which have completely shown us that. It's not that tough, but that's the goal. And so, one question I get all the time is, how do you know it's not going to be a correction versus a crash or a recession? Because recessions are the 1% of time. We do not want to use the system. We want to stay in cash. We want to be very careful. So, number one is macros are key. And this is the last thing I'll leave you with. The most important thing to understand about why we feel confident the markets are going to recover and go higher is because the financial system has been broken forever. So, this is money printing. As you can see, COVID straight up and still straight up. We're never going to stop printing money at an aggressive rate. And money just ends up going into the stock market, boosting the stock market and boosting assets, gold, real estate. This is why the market gets higher and higher and higher every single year, because we're irresponsible as a world with money and printing it. And this is why we have confidence markets tend to go higher 7 to 20% per year. The only other things that break a market: unemployment, interest rates rising too quickly, inflation rising too quickly, all of that you can pull up on a chart and see. And you can see it before it affects the market. So this is really important, is to not fear dips and discounts, but use them to your advantage. And the best way to use it to your advantage is to sell an option, get assigned, own the stock towards the bottom. And if you want to be a great option seller versus a good option seller, you try to get in at a lower level than most people. You try to be more patient on these moments, recognize them earlier, and put on the brakes before you hammer your positions, enter in the markets. So hopefully this helps you guys out. Hopefully it saves you time, energy, money, because everything I've taught on this video, I've learned the hard way. I've lost the hard way, and I've spent years struggling as a day trader, and figuring this out literally changed everything the last 4 years. I haven't questioned the system. I haven't changed the system. I've kept cranking the system for the last 4 years very, very confidently. And I hope you guys do too. Peace out.